Greetings and welcome to yet another video by XAUKING. Today we are going to turn this $500 into $1,000 using the stochastic oscillator only. Okay? Remember that the stochastic oscillator on its own is a very good indicator, all right? Because the stochastic oscillator measures the overbought and oversold conditions of the market. And based on the oversold and overbought conditions of the market, you basically don't have to analyze as much as anyone would have to in order to take a buy or sell position. So in this video, I'm going to show you step by step on how you can capitalize on the markets by using the stochastic oscillator only, and you won't have to trade with any other indicator. All right, in order to do that, please go to the function button, okay, or the indicator button right in the middle. All right, once you're on the indicator button, make sure to click on the main window. All right, once you're in the main window, you will realize that we have a few sections of indicators. The first one is trend, the second one is oscillators, the third one is volumes, the last one is Bill Williams. Now, like I mentioned before, the stochastic oscillator is an oscillator, right? Because it measures the oscillation of overbought and oversold conditions in the market. Oscillation means up and down movement, all right? Let's get into it. Well, in this section of the video, we are going to look at the stochastic oscillator settings. Remember that for this one, specifically to measure the overbought and oversold conditions, we are going to use the 15% K period, the 6% D period, and the 3 slowing, okay, for the slowing. Now remember that in order for us to take into consideration that the price has been overbought, we need to see the signal line crossing the other line at the 85% zone. Remember this, all right? So when you see that the lines have gone above the 85% and they are moving downwards, crossing each other, facing below, now going to the oversold, this is when we can consider that it's a good entry for sales, and vice versa for buys. Vice versa, meaning that when you see that the signal line right down at the bottom at the 15% is crossing, moving upwards, then we can start looking for buys. This is for the stochastic oscillator. Now, this is where you have to pay very close attention, because if you make a mistake, you are going to end up being in drawdown, excessive drawdown for a long period of time because of this simple mistake. This section of the video is really important because this is where most traders tend to make a mistake and end up blaming the strategy for not working. Now, let's put this into perspective. The higher the time frame, all right, the longer it will take for price to reach certain structure points, all right? Structure points, we are referring to lower highs, higher highs, lower lows, and so on. So we're referring to highs and lows. Remember that, all right? Or max of the day and minimum of the day. Now, which means that on higher time frames, you're supposed to have more patience than when trading on lower time frames. Now, this doesn't mean that if you trade on lower time frames, you're not going to have results, or if you trade on higher time frames, you're not going to have results. You will have results on both types of time frames or in both categories of time frames, but you need to decide which will be best for your type of psychological training. Now, for those that are scalpers, I recommend using the strategy on the 15-minute below. For those that are day traders, intraday traders, I recommend using it from the 30-minute to the 4-hour. All right? Remember that. And swing traders as well. 4-hour upwards, you can also use it. In fact, it works best for swing traders, but you have to wait longer, okay? And you're going to be in drawdown for at least a few hours before price starts to generate profits. All right. Now these are the time frames and their rules. Remember this. Okay, now we are here on the oscillator section. We just have to click on the stochastic oscillator. You will realize that my settings are off. So I'm going to remove and replace them with the new settings, which is 15 for the percentage K period. And then we're going to set 6 for the percentage D period. And then we're going to set 3 for the slowing. Remember that the rest of the settings are going to remain as they are. Example, price field will remain at low and high. The method will be simple for now. You could change it, but for now we keep it simple. And the levels, like I explained, are going to change. So if I click on the levels, and then I have 2 levels here. One for buy, representing the buy, which is the oversold condition, and one for sales, which represents the overbought conditions. So what I can do here, just so that we don't get lost, I can put 15, okay, for the buy. And then here I write buy, and in brackets I can write over sold, okay, because we buy when price is oversold. And here we sell when price is overbought, okay? Once that is set and done, just make sure that here it's at 85 because you want to give price that time to make the inversion, you know, to make the curve before you can actually enter. Now you will realize that we have two main lines. We have the signal line and the main line. Now what I meant by the crossing on the overbought and oversold condition is when the main line, okay, you can change the color if you want. I'm going to keep it at green, and also the signal line, I'm going to keep it at red. So it's when the main line and the signal line both cross at the 85%, which you have set here, or the 15% levels, all right? Once I click on OK, and you will see that it's on my chart. Now let me just go to a pair that we are actually going to be trading. Okay, we go to, let me remove this for now. I don't want to have a lot of pairs here, and I will use USD JPY for now just to see what happens on USD JPY. And then we can go to the charts and just look at USD JPY. So we are here on the daily time frame on USD JPY, and the daily time frame is clearly showing us that price has already crossed over at the 85%, which was overbought, and started selling. But if we move downwards on the lower time frame, you'll see that on the 4-hour, it tells us that this is a perfect place to enter buys on USD JPY. So we need 3 time frames confirming the same info. So I have 4-hour is okay to buy. 1 hour is also okay to buy because price is leaving the 15%. And then I can go to the 30 minutes, or 30 minutes is not good. Okay, 30 minutes isn't good because it's already gone. 15 minutes is also not good because it's already gone. 5 minutes is not good because it's crossing before the 15%, and the 1 minute is also not good. So we have only 2 confirmations. Now, the other confirmation you could look for is understanding the current market structure. And if I look at the current market structure, I'm looking at a double bottom on the USD JPY, which gives me a clear confirmation that I could buy on this one. All right, so I'll take into consideration the third confirmation being an actual analysis. So if I go on the 1 hour and on the 4 hour, I'm good to go. Where would my stop loss be? My stop loss would be right here. Okay, I don't want to blow the account. So I'll make calculations. Now, let me place a limit order with a very reasonable lot size. Let me change the lot size. This is a USD JPY, so it's very volatile. So 0.50, how much would that give me if my stop loss were to be right here? So if my stop loss were to be there, that would give me 149 by what I saw. So that's a very huge stop loss. So what we can do is we need to reduce the lot size. So I can say 15, we're going to lose 50. We can enter 5 positions, or we can use 5 positions of 0.15 on buys, and that will give us a total risk of 260 something, because it's actually 5 positions times 56. That will give us that much risk. And if we end up losing, we will lose only 50% of the account, which is okay, it's not bad. So I'm gonna go for it now, and then we will come back later. So I'm gonna take the buys now. 1, 2, 3, 4, 5. If I go here, I have 5 buys on USD/JPY. We cannot have any compromises on setting stop loss, so we have to set the stop loss whether we like it or not. I'll set it at 148,540. All right, 148,540. And what I'll do, just so that I don't have a lot of work, I will just copy and paste it on the others. All right, I'll just copy and paste it on the others. You guys might be like, no, indicators don't work. Yes, indicators don't work if you don't understand how they work. The guys who spent multiple years trying to understand and create those indicators are not stupid to spend so much money and investment on indicators, on the development of indicators. If you don't know how they work, just keep quiet and say, yes, they don't work because I don't understand it. Do not say indicators do not work, indicators lag. Indicators lag because you don't know how to read the information that they are displaying to you. But if you do a course on how indicators work, you will realize that the indicator has to present the data. All right? The indicator has to present the data first before you can actually read the data and then take decisions based on that. So this is the information that I'm leaving for you guys here. I'm speaking like this because I want you guys to be on the good side of things, all right? So this is one of our trades on the USD/JPY, and we can actually leave that as it is, step away from the markets, and come back in a few hours to see how things look like. It's now 10:23. It's Monday. It's the 31st of March. Let's come back in a few hours to see what happens to this pair. I know it's gonna buy, I have no doubt. I've used this for the longest time, and the things that I share with you guys is because I've actually used them. I'm not sharing it with you so that you guys get in the wrong. So let's step away from the markets and come back after a few minutes.
A few moments later.
And you can see that it's going well. All right, price did not reach our stop loss on the 1 minute. This is the 1 hour, how it looks like. We expect price to reach this level. All right, so this is not even 5% of the entire move that we are looking to catch. Now guys, remember that this strategy works on every pair. All you have to do is you have to be very, very patient. Once price reaches here, we should have like a 1-to-1 risk to reward ratio. This would be a 1-to-2 and a 1-to-3 based on our stop loss position. All right, enjoy, like and subscribe to the channel. If you would like to be mentored by XAUKING, all you have to do is comment down below mentorship, and then I will contact you and give you instructions on how you can apply and subscribe to my course. All right,
it's happening. It's happening. It's happening.